All right, we're going to start in a few minutes right now. I want to welcome you here. If you're from Facebook, please place a comment on the chat box. Tell us who you are and hopefully where you're from. I want to welcome everybody that got this link. This is a presentation about real estate investments. So I want to commend you to investing some time in yourself, investing time in at this hour. We switched it up today at 4 o'clock. We've had a little bit of constraint in time, but we're going to give you a full-blown video value of real estate and share with you what multifamily real estate is about. And if you are here just joining us and have never heard about real estate and really just the first video, you're going to get a lot of information that you're going to take with you, and you're going to learn about our company. You're going to learn so much of what we do, what we look for, but more importantly today is about what to look for when in what market when you're going to invest in multifamily real estate. So I want to just welcome you to stop by and so you can learn a lot. And my name is Jose Bellman. I'm the principal managing member for Capital Homes Investments. We buy and sell real estate primarily in California, but we also buy and look at specific markets out of California. And we are very diligent. We understand market cycles. We understand what the market says and what it's doing and what it's forecasting. We're very wise in that decision. So if you are excited, you could type in the chat box excited if you are in a computer. But if you're driving, applaud you just to the excitement you're going to be hearing on your phone, on your voice. We are streaming on Facebook. We are streaming on social media. So I welcome you to just learn. And you're going to start getting a lot of data, a lot of information. So some of the topics I'm going to share with you, if this is your first time, I'm going to share who I am. I'll be sharing tips of investing in multifamily, finding your 50%, calculating your cash flow, calculating cap rate. You're going to hear a lot of terms tonight that if you don't understand them, don't worry about it. We will give you a copy of the slides if you request them. Diksha, who is on here, does a lot of our marketing, delegating, and looks at what we need to do. You could just in the chat box type in your email, or you could send it to her privately. If you don't want to share it publicly, she will send out this slide. What to look for when investing in multifamily, single family, multifamily, exploring opportunities, Q&A, frequently asked questions, meet who we are behind the scenes. There's a lot of our team behind the scenes that does a lot of the work. It's not only me. There's a whole team that really gets together. And then share with you our social media links, or register for our next webinar so that you could just get informed, get to know what we're doing, get to know what the market is doing. We keep our hands on the pulse on the real estate market, economics. We know what's going on and what is selling, what is buying, what is the banks, what is the lender saying, the debt. We are looking at all those aspects. So I've been doing real estate for 22 years. I've been really buying real estate primarily all my life completely. I've not stopped doing this since I've been 18 years old. I love real estate. Real estate is what I do and what I live full time. I have a really great team that supports me. Recently, I've been speaking and I continue speaking at a few events online now. I'll be doing a few live events for the first time since COVID next month, in November and December. That includes the Harvard Club in October. I hope you could go on live stream so you could watch it. We will be sharing it on social media. So that's the reason why you want to follow us on social media. And Diksha will put it on the chat box. She'll share a few social media links if you're not watching on social media now. But if you're here, you could at least follow us. So let's dive in. If you're ready to dive in, you could, in the chat box say, dive in, ready. Type it in the chat box. I want to make sure you're engaged. So I'm going to tell you a few tips for investing in multifamily. And multifamily, I'm going to share with you, is very important. It's one of the ideas in how to start, how to look at a deal immediately. Let's say you find a deal this moment. What do? It looks beautiful. It looks big. You don't even know where to start. you're saying one day or how, I'm going to tell you what to do immediately. So one of the few tips I'm going to share with you is find your 50%, calculate the cash flow, and figure out your cap rate. So when I say find your 50%, the best way how to look at any real estate project, property, office, retail, they all differentiate. But when you're going to look at a multifamily, which is the focus of today's webinar, is you usually have costs that include on a multifamily. Let's say you have we're just going to keep it very simple. Let's say you have a property that's a 10-unit apartment complex. That 10-unit apartment complex cost, let's just throw a number, $1 million. And that apartment complex costs $1 million, and every month it generates $10,000 in cash flow from the rents. 10,000 cash flow. That's just income monthly. The question now you want to ask yourself is, Jose, what do you mean by finding your 50%? 50% is if you want to know if this deal makes sense for you, the first thing you want to do is you just slice this deal at 50% immediately from the cash flow, because that signifies the expenses. So remember I said, for these 10 units, multifamily, you're going to be obtaining 10,000 cash flow per month. So you're going to use the tip number one is remove 50%. So that means $5,000 is going to be removed. Therefore, your net operating income, which is a new word I want to share with you, NOI. If you want to type in NOI, so you could get this in your mind, NOI, net operating income, that means that is your cash for you before taxes. Cash for you before taxes, meaning you keep 5,000 out of those 10,000. Immediately when you do that, that's just tip number one. It tells you, is this a deal I want to jump into? Immediately. Is this a property I want to buy? Is this a property I want to do? So when I look at a deal right now, it's the same scenario. Just yesterday, me and my team, we looked at a deal that cost $20 million. Obviously, I went from $1 million to 20 million as an example, but it's just so that I could tell you where we're heading towards, and you could see the growth of your mindset where you want to go. The cash flow is 1.5 million a year. So that translates approximately, you're talking about 80 to 100,000 a month. So you cut it in half, and I looked at it, it's 50,000 or 60,000 monthly. And then I look at who needs to get paid, and that tells me immediately, is it motivating? Is it a deal or a property I want to invest my time? That is tip number one. If you understand this new tip on social media or on Zoom, you could just type in the chat box, excited. Now you know what to do. 50% tells you. We'll dive into another webinar on the down payment and all those details, but this right here tells you right there if this deal gives you any cash flow and if you're motivated. How do you calculate that cash flow? How do you look at this? Well, number one, we said 50% tells you the expenses on the cash flow. If you're getting 10,000, $50,000 includes your mortgage, includes expenses, includes the water bills, includes property management, it includes the utilities, it includes any third parties like maintenance, landscapers, it includes the cost to remodel the units. That is just a very conservative number to keep in mind. I want you to think about that. It's just a very conservative number to keep in mind when you calculate for your cash flow. And why are we talking about this? Why are we diving this deeper? What about if the deal doesn't make sense? I'm going to give you, just throw in another tip because I want you to learn from what I'm talking about on this cash flow is you want to also, if you have a relationship with a banker, you want to start getting at least some loan quotes, loan estimates on mortgages, properties. You know, subscribe to their emails. They'll start telling you the loan amount. They start telling you the cost of money. Just subscribe to the emails. You start getting data of what it would look like so that you could understand what it would cost you to your mortgage. Now, This is going to be a new word. It's called cap rate. Cap rate. What is cap rate in the marketplace? And what does this mean for you? So figure out your cap rate. This is a very critical step so that you could understand the cap rate. You take the monthly NOI. Remember, we already calculated the cash flow after the 5,000, and you multiply it by 12 to get that number. Then you divide it by the current market value. So as an example, we are talking about the $1 million purchase, and we know the NOI. Let's just say it's 100. Let's just say it's 50,000 a month. Then you already know it's 50,000. You divide it by the value, and that gives you the cap rate. Now, cap rates go by numbers. They go by a cap rate of 5, 6, 7, 8. When you're going to look at a multifamily online, let's say you look at a property that's selling for $1 million, and they say you're going to get a cap rate of 8%. That is telling you that you will receive 8% annual if you paid for that property all cash. All cash, meaning I will earn, Jose, if I buy that $1 million property with my own money, I will get 8% back. 8% for that building. Remember, this is just cash. It doesn't involve me having a loan. It doesn't involve using any investor's money. It doesn't mean anything else. Now, a higher cap rate generally means it is riskier, but you get a higher return. I just want you to understand that you're not going to go looking in the market and say, you know what, I'm going to go look for properties that are 8, 9, 10, 11, 12, but I'm going to just warn you right off the bat, the higher the cap rate, that just means that there's more risk. What's a risky property? A risky property could be a property that is not has a lot of maintenance issues. Location, I could tell you maybe a property that it's in a really difficult area. You go to this property, let's just call it let's just throw a city that we all know, Los Angeles. You go to East Los Angeles and you find a property and you say, wow, I could buy this property for $1 million and I'll earn 20% a year. But what it's trying to tell you is it's only giving you an indication that yes, you'll earn 20%, but it comes with some territory. It comes with a little bit of challenges, responsibilities. It comes with a lot of responsibilities that you need to evaluate if it's worth to make it. Now, how is it that we could earn those returns with a good property then? How can we do that? There's several ways you could do that. One way is to make sure a property in a good location, if it gives you a low cap rate, that there is room for you to grow that cap rate. How do you grow that cap rate? That's another webinar, but I'm going to tell you right now a trick. How do you grow it? Let's say you find a property right next to Whole Foods, Starbucks, Denny's, you name it, all the best retails, Home Depot, it's so beautiful right there, restaurants, you know, at night, quiet, peaceful. I mean, you got a property that is so amazing and you're wondering, well, how do I grow it so it could give me good profits for the next 10, 15 years? And the way you do that is you got to cut expenses, increase rents, and therefore that increases the value of the property. That gives you cash flow that increases the interest of the return. You have to figure out those variables. And that takes experience, that takes also due diligence, being very methodical, looking at what it is and what it's not. Now, one of the things that this webinar really emphasizes is, well, now I found it, but am I buying it in the right place? Am I buying it at the right location, city? Am I buying just a beautiful property in an empty city where there is really nothing else going on? Why am I buying this property? A lot of people don't understand that, yes, you bought a really great property with the high returns, but what about if things change next year, 4 years, 10 years? What am I going to do? I'm going to tell you one of the errors that I made in my earlier years in my career was I was buying real estate properties that were just dirt cheap. You know, not pennies on the dollar, but dollars. You know, a $5,000 property, $8,000 property, $30,000 multifamily property. But what it was costing me, it was costing me headaches. It was costing me risk. There was no jobs. There was nothing movement on that city. One of the rules that I place on all properties now is I want a population of 100,000 minimal. I need to make sure that in that city, it's growing. If it's not growing, then who's going to live in my property? Nobody wants to live in this city. I'll give you one city, for example, in 2009, that it had population. It was just dropping. It was dropping. And you were trying to figure out why is it dropping? That's Stockton, California. It was dropping. It was dropping because the violence, there was no jobs. People were saying, I got to live and move to the Bay Area so that I could find jobs. And so what creates jobs is what creates populations. Now, you also want to have an airport nearby. You literally need to have an airport. If you have an airport in a city and you have one, it tells you that there is activity, that there's people that want to visit, business people, companies could stop by there. You have an airport when they could do that, and that creates jobs. It creates opportunities. Therefore, you want that for your buildings where you're going to buy. A lot of people have missed this key idea, Starbucks. I have all the properties that our company right now owns and manages. We have them all at the minimal 5 miles away, if not closer, from a Starbucks location, if not a mile. Why? Because Starbucks and Whole Foods, I'll tell you another one, they have a lot of smart people that buy real estate for them. I'll tell you one idea. Starbucks, if you look at every Starbucks, just look at it, not because of the brand, but look at where they are having their businesses. You're going to start realizing that they buy and they lease where there's a lot of traffic, there's a lot of retail, and there's a lot of growth. That's the key, growth. If you understand what I'm saying, type growth. Growth is what they want. They spend thousands of money on very smart college kids that graduate, and they invest their data so that Starbucks could grow, and they could grow and keep growing. So what does that mean? I look at Starbucks and say, where's the next Starbucks going to be at? If Starbucks is going to be in a town in Dallas or in a town in Texas, you best believe I'm going to look for a property in that area. I'm going to look for a property in Arizona. I'm going to look for a property in all these these areas. But remember, not just because of Starbucks I'm going to buy it, but other factors, population, airport. Now, let's say your population is not at 100,000. Let's just say that, but it's at 80,000. But it's growing at 1,000, 2,000 every year consistently, then I would dive in there. You want to be consistent. You want to make sure it's growing. What's making it grow? Is it the jobs? Is it the industries? Is it like an airport? Is there a military base per se? And we're going to talk about that right now, of what not to buy and why. But those are really good suggestions of what to look at. Now, when you buy a property and everything's fitting and you don't have a bus station nearby, you got to make sure you reevaluate that as well. Why? You see, in today's world, today, the new generation, people sometimes are not driving anymore. They use a bike, they walk, or they use the bus. Okay? That's just the way things are working. That's the way we're developing. That's the way we're emerging. That's the new generation. So you need to adapt and make sure your apartments have nearby bus stations, because if they don't have them, I could assure you the tenant who's going to apply, they're going to say, how am I going to get to the store? How am I going to go and visit my family? How am I going to do in my job if they work at their office? Just those examples. If you have that, it's going to give you an edge value on your property. If this is interesting and you found the key here, type interesting, because now you know and understand that, wait, if I'm buying a property right this moment, stop right now and evaluate what I'm telling you. Evaluate, because when you're going to sell it, the next buyer is going to see these things if they understand it. Now, Chamber of Commerce in your town. Why you want to know about the Chamber of Commerce? I'm going to tell you why, because a Chamber of Commerce is an entity in your city or in the city that is going to tell you what's happening, what's going to happen. Those are the people that corporations get called for by first. These are people who get the calls of what's going to happen, events, everything you could imagine in the city, inside the city, it's in that place, Chamber of Commerce. You start going and making a network event, visit their events, start talking to the head of the people. They're the people that know what's going on. You want to talk to them. Now, in terms of the city, state, you got to look at rental laws, because if you buy in California today, which is not a problem, but if you don't know how to mitigate these properties and you have a rental restriction law that you can't raise rents, well, guess what? Remember I talked about how do you increase the value of the property? You got to make sure that that property has room to grow. If it doesn't have room to grow, then you're not going to be able to raise the rents. Now, to separate California to another state that I know that you could do that, one of them is Florida, Texas, Oklahoma, Atlanta, North Carolina, South Carolina. You cannot raise rents in New York. You cannot raise rents in California, and possibly in some cities in Chicago already, you cannot raise them. So you need to look at that. You need to evaluate, because if you don't evaluate those rules, then you're just going to be stuck. You don't know how to move your property. You're done. It's basically saying you can't even make more money. You're capped. Now, military base. If I'm going to tell you, in the military base, there are military bases in the country where that's all there is. Literally, I'll give you a place, El Paso, Texas. You go there, a military base is there. That's all there is. That's it, military base. Now, imagine you buy a beautiful property, right? Let's just say in the military base town, right? The military is there, they lease off you and whatnot. And let's make a hypothetical. Let's say that the military base just closes out, says, we're going to move this military base and we're going to move it to San Diego. We're going to go back to San Diego. So guess what? What happens? Your apartment is now empty, done. There's no tenants. Where are the tenants? You were banking, you were relying on the military base. Now you can't even lease it any longer because you were depending on the military base. The military base says, hey, see ya, we get paid by the government, so we can't lease over to you. Now, let's add the job employer as well. Let's switch it. Let's say that there's a Home Depot and all the new homes are all around, apartments, and Home Depot is like the biggest employer, massive employer. Let me give you a reality one. Let's use Apple. Apple is like the biggest guy in Silicon Valley. Can you imagine if they left today, tomorrow, they are just gone? Do you imagine what's going to happen to California? Just California. Now imagine smaller, like Cupertino, Santa Clara, all that area. It's going to be wiped out. All those people that were leasing apartments, they're not going to be able to stay there. They're going to say, hey, I got to move. I can't afford it. That was the only employer. There may be other employers, but when I say one job employer, I'm talking the biggest employer that you're relying on this apartment. If this makes sense, type makes sense. I want you to make sure you understand this because you have a big opportunity out there, but there's also a lot of potholes, a lot of challenges. There's so many areas that it could affect you on the long run when if you don't do it right, you could really get stuck in a property for a long time. It's going to tell you you cannot sell it, you cannot lease it, you ended up have to selling at a discount, or you may have to literally just let it go and give the keys back to the bank And that's not the idea of this webinar. The idea of this webinar is so you could get familiarized and how you could grow your investment and how can you do that. Now, we went through this last week, but I'm going to go through it really quickly. Is why am I talking about multifamily? I keep bringing it up, and why. Number one is bigger cash flow. You have control. You have more tenants, tax benefits. You have so much you could do versus a single family home. One of the best ways I could give you the best example of the risk and reward is as I'm going to explain to you right now. You have a single family home and you have a great tenant, pays on time, beautiful house, has a pool, there is a Starbucks around the corner, there's a Home Depot around the corner, there's a nice school around the corner, there's a bus stop around the corner. Basically has everything that we talked about. But one day, COVID comes. If you don't know what COVID is, well, I know we all do, but sarcastically, COVID comes. There's a single family home, everything's great, but they can no longer pay the rent. What do? Well, number one, the tenant has to stay there. So now immediately, you cannot collect any more rent. You're all done. That is it. One shot, one risk. It's very risky. Now, let's remove the single family home example. Now let's move it to a multifamily. You got 50 units, COVID happens, you lose, let's just make this really exaggerated. 25% of the tenants cannot pay. Well, you got other 25 tenants that could pay and sustains the asset, sustains the property, so you could ride the wave. You understand the difference now? You understand the risk that I'm telling you about? It's a very, very more less riskier than a single family home. Sometimes when we can move from single family home to the multifamily, it starts here because it starts in our mind. We figure that maybe we can't, maybe the price is too high. Maybe we don't know how to manage it. We don't know how to do the underwriting. But now you have 3 ways how to do it. The rule is 50%, the cap rate. Then looking at what the locations. With all that, you could go out there and buy a property immediately with no problem. You could look at it, a deal, a property, and say, is this something I want to do? Or is this something I want to pass? The opportunity is there. It's just a matter of what you would like to do next. As I mentioned to you, you have less vacancies, you have less cash flow, investing in pros and cons in multifamily. It's harder to scale if you don't know how to invest in multifamily. You have less vacancies. Some buildings have a lot of vacancy because they can't manage the marketing. They don't know how to make the deal work, and it makes it difficult. So some of the difficulties about these properties are it makes it harder because you never manage one of those properties. I'm going to tell you right now, and this is my thought process on some of the top 10 markets. Now, because I say top markets is just telling you what is for this year, but it doesn't mean, everything you do with your due diligence, wherever you're watching, everything has risk, but all top 10 markets include jobs, population, includes the growth that has been happening in the last few years. So I'm just sharing with you just a few of them. There's a longer list, just a few of them of what cities that I've been focusing and looking at. Fresno, Stockton, Southern California, Tucson, Arizona, Las Vegas, Albuquerque, New Mexico, Spokane, Washington, Phoenix, Indianapolis, in Atlanta. I've been to all of them except I've been to all of them except Albuquerque. And so it's just a matter of what it is and what it involves. These are just top 10. You could Google them. It gets you going. It gets you motivated. What is next, so that we could make sure that you understand. These are just markets that I personally have seen that has helped me a lot. All of them. Now, can they all switch overnight? Can they switch next year? Yes. Everything could change. It could change because of a company. It could change because foreclosures were to be rising. It could also mean that the mayor of that city or that place, it has a different agenda. And all those factors play around on the role when you're going to look at a property. So you have to dive in deeper. You have to get to know the Chamber of Commerce. This is really a job that is investing, but you got to make sure that it is all making sense before you make a decision. So we're wrapping it up on this webinar. My idea of every webinar you come in is that you take at least one big idea, one idea that you could go and use it. As long as you get one idea, you already won. I want you to think about when you're listening online on social media and Zoom, just take one idea and that's going to give you your next move for your real estate opportunities. Any questions you have, type them in the chat box. You're welcome to open up the mic and ask any questions that you may have. And just type them in the chat box and I'll continue just talking until somebody asks any question that you may have and I could just keep talking. So frequently asked questions that you may have, please share them here. I'm going to tell you one of the questions that I get asked a lot is, have you bought a property at a city where things have changed and how did you adjust? So one city that did happen to me was in 2019 in April in Stockton. I bought a building that I had maybe half of it full, and the governor declared a rental control. What that means is, of all those people living, I could no longer raise rents. I had to go back. So I had tenants that were paying $500 and I raised it to $1,000. By the new law in the fall of 2019, I had to go back. So whatever I thought my plans were changed. Any tenant that I was charging them $1,000 came back. Any pro forma value dropped by the millions because it no longer was going to forecast what I was thinking of. So that's just one. Now, what did I do to adapt to it? Here's what I did. A lot of the tenants who were still living there that couldn't afford to pay, they could afford to pay the low rent, but their unit was in bad shape, very bad shape. We were still doing the remodel, but what I did is I remodeled the half of the building and I moved them in there. I offered it before they could move there, but it was going to be at a different rate, but they would have a very brand new unit. So the people that were living there for a long time, they took that new move and said, hey, I'd rather move into the new apartment. Yes, I'm going to pay $1,000, but you're going to be having a new unit. It wasn't going higher than 1,000, which I could, but it was just enough so that I could keep riding the wave. I could have left them there. I could have said, no, you could stay at 500. I'd rather charge 1,400. But I figured if I did this, I gained 500 and I could get that other unit and get them to $1,400. So just kind of give you a few ideas. Another question that I asked me was, what properties have you purchased and you found that it turned around for your favor? It always has been properties where there's population growing. If you focus on that factor only, you'll always succeed. If there's population growing, you'll always succeed because that is what gives you opportunities of people that want to lease. I hope that gives you that answer. I want to remind you that our team is here to assist you in any questions in investments, real estate questions, marketing, even underwriting. We do all that. And our phone numbers there, our email, our social media links, they're there right here. Diksha could always is our main person that responds to everything. Our website is, we're pretty excited, right, Diksha? We basically, website will be going live. It's actually live, but we haven't really shared it to the whole people completely, but we want to let you know that it's going to be going, and we're going to share it with you. Everything that's on there is so amazing. We got a special webinar next Wednesday. If you're an early morning riser at 7 a.m., you could join. We're being invited to speak to a lot of students from the university in Pakistan to talk about entrepreneurship mindset, how business purpose is developed through the journey. It says proposal, but there was a typo. It's supposed to be purpose. So we will email you the link if you're interested on Wednesday at 7 a.m. because it's the time zone that it works for them at 7 p.m. And they're going to have hundreds of students down there. I'll be talking about entrepreneurship. There's a line of topics I'm going to already talk about. All these topics involve your mindset of how you're looking for that next journey. What's stopping you? What hurdles? What has allowed me to continue or to push myself? All these topics I'm going to share on Wednesday, September 22nd. If you're interested and you want to know about it on social media, type on the comment chat box here on the Zoom. If you're interested, you could type in interested. Diksha will email you the link to register. It is going to get full. It's only limited for a few space. A lot of students are already registering on Wednesday at 7 a.m. We will be there. We will be answering questions, sharing so much knowledge, information, how you can make that next move. You see, multifamily is a combination of entrepreneurship because you are an entrepreneur, you are being a person that's trying to grow, and you need to be involved. So just wanted to share that with you. So if you could join us, that'd be great. I just want to thank all of you that joined on social media, on Zoom. If you've been here for the first time and you have questions, you have even post questions, type up in the chat box. I love this presentation. We do have a webinar besides Wednesday, which we will share it on Monday, what the topic will be. We may have a guest that will join us to share more. And then we'll go back to a regular time so people could join us at a later time. But this is our thank you for joining us. If there's no questions, please reach out to Diksha or myself. If you want to please also put a review on our Facebook and message us in an email so that if we need to, if you have any questions, but place on Facebook, on our Facebook viewers, that private message us your email IDs on Facebook, and we will send you a link so you could place a review in our company, Google. We're looking for people that have been working with us, that were satisfied, that we satisfied your business, we satisfy everything that we've done. We're pretty active. We want to make sure that we honor you and bring you on and share what you've done, that we've done to you on your business, and share with everybody else. From me, Diksha and Capital Homes Investments, we thank you for your time. We thank you for joining us. Is there any messages, Diksha, on Facebook that I missed? Because somehow I can't see it here. Just want to make sure there's no questions on there, that I don't want to skip them and log off too fast. Want to make sure there's no questions on Facebook. If there's no private messages, any comments that they're asking, please reach out on the private message. We want to make sure we answer your questions. If you were excited, you liked this presentation, please put a comment that you enjoyed it in the chat box, that you really feel excited. This was informative. Please do this, and we got more and more and more. I mean, we could do these webinars for years, and there's so much. Just want you to understand that what we learn as a company, we learn every day at a different level. We're sharing it with you, so it doesn't stop. It's not like we hit a bottleneck point. We're still growing. We right this moment, and I'll share with you, we are negotiating a $20 million property this moment, and once it's in contract, we're going to share with everybody and break it down. break it down, meaning we're going to break it down. What was the debt? What was the rent roll? What was the money? How was the cash flow? Why did you buy there? All these is going to be there so you could join. So from me, Deekshan, and the family of Capital Homes Investments, we thank you. You have a great afternoon, and please message us for next Wednesday's webinar. We would love to see our family from the country join the Pakistani family so we could support them. And let's see, Diksha, any last questions that anybody has that I could make sure that everybody is on here? If you just joined us, we're just finishing up our meeting. Diksha will happily send you a copy of the presentation, and you could just review it. But next time we will send. We would love to see you on our next meeting that you are here. So thank you all. Thank you, the people on social media, and we welcome you for our next event. Take care.